This interview is brought to you by Fortuna Silver Mines, proven mine builders and strong operators in Peru and Mexico.
Welcome to Cambridge House Live. I'm Vanessa Collette at the Toronto Resource Investment Conference. I'm joined by John Kaiser, head of Kaiser Research and KaiserBottomFish.com. Welcome, John. Great to have you here with us today.
Vanessa, it's a pleasure.
John, how healthy is the venture today?
Well, we have another sort of weekday for gold, and every time gold is down, it washes across the juniors, whether or not they have anything to do with gold. So it's a bit of a subdued day today, but I'm of the view that one should not let the daily fluctuations in gold really bother one, because I am quite optimistic that the reasons people are negative about gold are actually very positive for a higher real price in gold in the next 2 to 3 years.
There has yet to be the mass bankruptcies that you've predicted. Are they still coming?
Oh yes, there's about 1,400 venture companies that are in the resource sector, and about 500 of them have negative working capital, and they owe about $1.6 billion to accountants, lawyers, drillers, all kinds of parties. And there's no money flowing into the treasuries, especially the treasuries of companies that have a negative working capital. So when they have to pay for the audits next year, the accountants are going to be asking for cash up front. And then the management's going to have to make a hard decision. Dig into their pocket or hand the keys to the stock exchange.
So with that considered, what kind of companies are going to survive or thrive in this, climate?
Well, the 500 to 700 companies that are threatened, it doesn't really matter. Most of them are not serious companies in the first place, they're just clutter. But there are about 800 companies that have projects either at an advanced stage or exploration projects, and they have kept their head above water. They have more than $200,000 in the treasury. But the big tough thing facing these juniors is this market is so unwilling to reward any progress in exploration or in the feasibility demonstration work, allow the stock to get a higher price, enable the company to raise additional capital at a better price than the last price where they raised at. So it's this dilution risk which is haunting the market.
Now we've seen a bit of a rebound since June. How permanent is this?
August was actually a great month for the better companies. They rebounded 20-30% from levels that where they were before the gold smackdown in April. But that rolled over about a week and a half ago as we headed into September, and gold's rally stalled, and then now we're seeing gold being sort of hammered down again, and Goldman Sachs keeps reminding people that $1,000 is where gold's going if this American and European economy are back on track.
Right. Now, the rebounding gold price has played a big part in the venture, rebounding as well. Where do you see gold going next?
The big thing is the shift in the narrative. I mean, all the gold bugs have been talking about hyperinflation, currency debasement, debt default, bad things happening to the American and European economy and the whole world, and somehow this was supposed to be good for gold, and now things are starting to turn around. Interest rates are rising again, and so now they're saying, you guys are wrong, goodbye to gold, when in fact the buying in gold is not from fearful people worried about the apocalypse. It has been coming from India, China, the Middle East, people who aren't buying because they're afraid. These are people buying because they have experienced growing prosperity. They are stashing some of their accruing wealth into a portable form that they privately possess because they don't quite trust what their governments might do in the medium term or long term. These are people buying gold because they see the world becoming a better place, not a scarier place.
Interesting. So should people start buying now?
Well, I think people should always consider putting some of their net wealth into gold, some physical gold, or at least with an institution where the presence of the physical gold is audited. It should just be a fraction of their wealth, especially in a Western economy. And these people in these developing nations are not putting all their wealth into gold. They're also putting wealth into businesses and things like that. In terms of putting riskier capital, I think the equities, especially the gold equities, now are a good time because the market bias is still towards $1,000, much more likelier than back to $2,000. And the rebound we saw in August, I mean, gold got to just over $1,400. That's not something anybody was very excited about when it was at $1,600. But if we were to get gold back to $1,600, which I think is actually plausible, then a lot of these stocks which start looking shaky at $1,200, well, then they start looking very good again. So the leverage is in the gold equities because they're being priced for $1,000. If gold goes from $1,300 to $1,600, that's only what, a 10-15% gain. But these juniors could go up 2, 3, 4 times in response to that type of move. So that's where I would say put your risk capital right now.
And these kinds of equities are the ones that you look at in your Bottom Fish report?
Yes, well, we look for 2 types of companies. There's the kind that already have a deposit with a resource estimate and where they have done perhaps a PEA economic study or working on a pre-feasibility study and where we can see the numbers, what sort of mining scenario they're looking at, and we can crunch the numbers. What happens at $1,600 gold? What happens at $1,000? Where does the thing become worthless? What happens if we do see gold charging through $2,000? What kind of impact on the net present value per share basis is there? The other kind are the companies that are exploring for gold. I mean, we might have to deal with $1,200 to $15 gold sideways for the next few years, in which case what you do is you explore for deposits where the grade is such that it works very well at those $1,200 to $1,400, $1,500 range. And then the stock takes off and starts trading. It just becomes a question, how big, how rich, where does it stop, and how many zones of this is there? And that nobody cares what the price of gold is, whether it's up 50 or $100. It doesn't matter because it works where gold is right now, plus or minus $100.
John, are you getting into some of the specifics on the companies themselves? Are you still a fan of Exeter Resource?
Well, Exeter has a very large copper gold deposit in Chile, I believe, Caspiche. And there were a lot of these types of deposits taken over in the last cycle. And all the big majors now are sitting there having indigestion, and there is no appetite to take over such a project. It's way beyond the means of a junior to put into production itself because it's $1 billion plus capex type of situation. So they have to tread water for now on that project and wait for gold and copper to strengthen. I'm actually a believer that gold and copper are twinned. Most people think gold and copper are inversely related. Copper goes up with the business cycle strong. When business cycle strong, well, who needs gold? Gold goes down. But I'm arguing when the business cycle is strong, the rest of the world's growing richer. The United States, while still growing, is becoming relatively less important. 10, 15 years down the road, the makeup of the world is very, very much different. And I see both demand for the physical stuff that makes the world go round and demand for gold, not just from the emerging prosperity, but people in the West who start thinking US dollar no longer the single reserve currency. What's that going to be like? Central banks saying, how are we going to cope with that? They start stepping up the buying. So I see the trend for both of them going up. So Exeter is a classic bottom fish in that regard. They're also excellent in the sense they have $50 million cash in the treasury, and they are an exploration group, and they get to cherry pick now amongst all these little juniors, some of them with no money, some of them with just $200,000, enough to stay alive without doing anything. They can now go through all this and cherry pick projects, do a farm-in deal, test it, and who knows, come up with a winner that enables them to do what they did before and spin off a project, the Cerro Moro, through Extore, and then still have Caspiche as this long-term bet on higher copper and gold prices.
Great. Well, we'll definitely be watching with interest. Thank you so much for joining us today, John. Appreciate your time.
You're welcome.
Thank you.